Well, good Monday morning. How are you doing this morning? I'm Marlon Bowling, your tour guide to the ag commodities. Glad to have you on board as we open up a new trading week here. And we're getting closer and closer to the end of the month already. So let's take a look at some new information just came in moments ago from USDA. We have overnight, or as they say, flash export sales that came in. And it was a couple of sales. This time they were both soybeans. Let's dissect this a little bit. So we had one batch of 330,000 tons of soybeans sold to China. 66,000 tons of that is for the old crop. We have 264,000 tons of that batch for new crop delivery. Then they say on this 204,000 tons that we see, that was also for China. It says soybeans received during the reporting period for delivery to China for the new crop marketing year. So in other words, that sounds like that would be an accumulation of some smaller sales that totaled up to this. So anyway, you add them together and you have over 500,000 tons of soybeans sold to China. That would be over the weekend. However, you look at where we traded overnight, and let's go to the big board. So let's start with corn, and corn was a little lower this morning, even though it traded on both sides of unchanged overnight. We had July corn down 2 at $7.87 per bushel, and you had that December new crop contract down 4 3/4 at $7.19 3/4. Now these soybeans, and of course this information about the export sales came out after the Globex had closed. So we had July soybeans, as Janet mentioned, down 22 at $16.66 this morning, and you had November down 17 cents at $14.88 1/4. A lot of pressure there. Also, of course, we were talking about all the wildfires out in the plains. That's obviously a remnant of the high winds and high temperatures out there. And July wheat in Chicago was down 3/4 overnight, but the deferred months were just fractionally higher. In Kansas City wheat, you had July actually 2 1/4 higher at 11.51 3/4. And if we look at the Minneapolis spring wheat trade, where they're trying to get the crop in the ground this year, with limited success, I might add, we have July 2.5 cents higher at 11.65 1/4. Let's bring in Brian Hoops of Midwest Market Solutions and chat a little bit about this. So the markets overnight on the corn and soybeans seemed a little bit weaker over there. What do you think about that now that we're getting toward the end of the month? And I believe we have first notice day coming up the end of this week, correct, on the May contracts?
Yeah, good morning, Marlon. You're absolutely correct. Friday is first notice day against the main grain futures, so any long positions after Thursday's close is subject to deliveries, and you really don't encourage you to try and go through the delivery period unless you're an end user, but a lot of times this will put in some sort of a little bit of a low for the market, and then we'll rally past the delivery period. So we may see some weakness on our screens overnight and early this morning, and maybe we will continue that through this entire week, but as we get past that delivery period, if we can then see more of a rebound as markets start to look towards the May supply and demand report at that time, and that report looks to be pretty friendly, actually, as USDA will update not only this year's production numbers, but they'll also give us the first glimpse of this crop that we're trying to get seeded. And I was traveling over the weekend up into South Dakota, and boy, was it windy. A lot of producers out in the fields along the I-29 corridor between Iowa, Nebraska, Missouri, a lot of fields getting planted, getting seeded, but just adverse conditions, extreme wind just to start with, and in some areas extreme dry. Of course, producers in the spring wheat belt battling to try and get their crops in the ground because of too much snow, cold, rainy type conditions. And then you have the hard red wheat belt where it's been just extremely dry, and we would look for crop ratings to be down this afternoon due to that extreme heat and extreme dryness.
So what do you think about the wheat market as it stands right now? I mean, has it reached just kind of a point of support at this point in time here, just because it is so dry? I heard from a friend over the weekend that they only had maybe a 1/4 inch of rain in the plains since last July. That's hard to believe.
Yeah, the first rains in over 200 days were received over the weekend, so it's extremely dry, and it wasn't really a soaking rain by any stretch of the imagination. But yeah, you'll have the crop ratings out this afternoon. Hard red wheat ratings are expected to decline a couple percentage points. We're already the second lowest wheat crop in history, and the hard red wheat is in fact the lowest, with soft red wheat, pretty highly rated. You're going to see a deterioration there, and I think a lot of the premiums going to be put into prices is going to be in the spread market. It's hard to justify a rally in wheat given our slow export pace. So rallies are going to have to come from supply type issues. And, there's a concern about the supply of the hard red wheat crop because of the dryness. There's a concern about the spring wheat crop because of the lack of planting pace that we're going to see. And we're going to see that affected in tonight's report, as we'll see, I think, corn, soybean, and spring wheat seedings well below the normal pace for this time of year. And then tomorrow morning, Stats Canada comes out. Now they're expected to show an increase in spring wheat seedings, but again, they're going to fight the same weather conditions that a lot of our producers in the Dakotas, Minnesota, Montana are facing. Too much moisture in the form of snow that's going to take some time to melt, and then for fields to dry off.
All right, and the dollar up about 400 points today. That could be a negative factor too. Brian, we'll take a look at the livestock trade when we come back. Let's go back to Brian Hoops. Brian, when we wrapped up last week, we had some cattle on feed numbers that came out. We had cold storage numbers. Janet touched on them a little bit ago. If we can bring up the cattle on feed summary here once again. It came in at 102% for the on-feed number. The trade was looking for 100.4%, so a little heavy there. Placement said 100%. Wow, the average trade gas only 92.1. Marketing is 98%. That's about right in line with what they were looking for, but a higher than expected on-feed and placements number. What does that mean for the trade today?
Yeah, it's going to be a little bearish. It's a surprise to the trade compared to the estimates. We did sell off on Friday going into the closing bell, so that'll mitigate some of the damage this morning because we kind of already factored in some of it. But this is a pretty big surprise. So I would expect to see, a lower opening in some of those deferred contracts and some pressure against it. This is only down about 8,000 head compared to a year ago, and the trade was looking for a much significant loss compared to what the trade had expected. So I would expect, October, even December, to come off of these contract highs and see a kind of a strong break in prices. But again, traders should be stepping in and buying a pretty deep break in the market today. The question will be, how do we end up in the trading session as we try and assess where cash trade is going to be? Right now, it's just called steady. But really the key, I think, for the week is going to be how aggressive the Packers are with their kills. They've been 2 out of the last 3 weeks have been over 650,000 head, which is bullish because they need cattle at that point. The only time we didn't see that type of kill was because of Easter. And if they put together another big kill this week, look for the cattle market to have a strong rebound. Otherwise, we're going to remain under some pressure.
Well, it was lower on the close. June live cattle were down $1.47. We'll see if they rebound today or not. This is Friday. On the feeders, you had the May down 97 cents. The deferreds were a little higher, though. And we wrapped up last week with the lean hogs showing June up $1.60 at 118.77. So we'll see how they start out, too, in just a little bit. Thanks, Brian, for the help. Brian Hoops, Midwest Market Solutions. Janet, we are about ready to begin. Back to you.